Hey, what is going on, guys? Welcome to the Term 1 Week 2 market recap. This week witnessed new unemployment statistics, revelations on China's rapid economic recovery, and the appointment of a new World Trade Organization boss. So let's get into it. Unemployment has dropped from 6.6% in December to 6.4% in January, with 29,000 additional workers finding employment. The improved labour market was driven by Victoria's economic recovery, and in fact, in all other states, employment actually decreased slightly. Meanwhile, underemployment also dropped from 8.6% to 8.1%, which means it is below pre-pandemic levels, despite both the aviation and tourism industries still struggling to gain traction. AMP Capital senior economist Diana Messina said 93% of the jobs lost at the peak of COVID during the first wave in April and May had now been recovered, as you can see in this graph. Comparatively, the US has only recreated 56% of jobs that existed pre-COVID, showing that Australia at the moment really is the lucky country. At least for most people. Unfortunately, youth unemployment hasn't followed the trend and remains significantly higher at 13.9%. A report from Moody Analytics on Wednesday found that China's recovery has been the key driver in the Asia-Pacific's economic rebound, with Vietnam and Taiwan both recording positive growth in the year-on-year figures relating to the December quarter. China has had such a swift economic recovery that they are now essentially overheating their export sector, with 3 shipping containers leaving China for every container that enters China. It has created a mass shortage of containers for the Asian giant. As a result, exporters are paying logistic companies premiums to send crates back over to China with nothing in them rather than wait for Australian exporters to load them up. This, in turn, has put a lot of pressure on Australian exporters to get their goods shipped within schedule. However, it must be noted that the situation has been worsened by a strike from the Australian Maritime Union over pay-wage disputes. The World Trade Organization has struggled to find any relevance in recent years as a number of trading agreements have fallen into disarray, whether it be through Trump's protectionism, the UK's exit from the European Union, or China's bans on Australian exports. Their newly appointed leader hopes to change all that. Now, apologies in advance for the pronunciation. Ngozi Okonjo-Iweala is a Nigerian economist and an international development expert who grew up in a civil war. She studied at both Harvard and MIT before then going on to spend 25 years working for the World Bank, making it to the organization's second-in-charge position. The WTO leader hopes to make serious reforms in the organization that can give it more power in regards to making judgments on trade disputes. The WTO is renowned for failing to have a serious impact on resolving unfair trade outcomes. Hopefully, Ngozi can change that. This has been your Week 2 market recap. Thanks for watching, and all the best for the week ahead.